War is a terrifying affair. We have been reminded of newscasts covering the conflict between Russia and Ukraine. Social media posts of people closest to the war share their raw emotions of fear over the uncertainty and keep the world on its toes. Our heart goes out to all the lives lost in the conflict and hope for peace to return to the region. Today's topic, we're going to talk about the war in Ukraine. Now, specifically, we cover how this kind of conflict affects and relates to Singapore and its real estate market in this episode. And in our analysis, we'll bring up 3 points on how geopolitical instability in other parts of the world impacts Singapore's real estate market by learning from a few key indicators as well as learning from history. Firstly, let's talk about the effect of geopolitical instability. Now, Singapore has enjoyed a long period of geopolitical stability. This does not often come to mind due to our busy schedules, juggling work and families. It's a privilege to live the way we can, and we should never take peace for granted. Outside of our small island, the past decade has been littered with destabilizing geopolitical events. For example, the Armenian-Azerbaijani conflict in September 2020, Myanmar civil war, February 2021, and earlier war in Donbas, Ukraine, March 2014. There are many others as well. The most salient aspect of destabilizing events is infrastructure as well as real estate destruction. However, this is more true for military-level conflicts in urban areas. In the above chart, we see the supply of real estate in dwelling stocks dip around 11% in the year of the Donbas conflict. Not all geopolitical events lead to direct impacts on the real estate market. In the case of Armenian-Azerbaijani conflict in 2020 and Myanmar civil war in 2021, we see a dip in GDP growth in their respective years. Note that many factors affect real GDP growth. From 2020 to 2021, the COVID-19 pandemic also negatively impacts GDP and confounds the effect of geopolitical events. Nonetheless, we see a more substantial negative shock in the year of the conflict rather than the start of the pandemic in 2020. Every country and conflict is different. They vary in the degree of violence and breadth of impact. Thus, it's a little bit difficult to predict how such conflicts will affect GDP as it unfolds. We only know for a fact after some time has passed. In observing the financial impact of such crisis, patience is crucial at arriving at a more accurate assessment of the big picture. Number 2, let's have a look at geographical proximity and impact. Destabilizing events have a localized effect. Neighboring countries might also be affected, but the magnitude of impact should be considerably smaller if the conflict is contained. Now, Singapore is mainly sheltered from the direct implications of the above-mentioned conflicts on our real estate market. The chart above shows Singapore's private property price index by quarter-on-quarter basis, and boom and bust cycles are closely related to cooling measures, the US Fed interest rates, as well as global economic crisis. Since these changes directly impact buying and selling decisions, it pushes away other events and considerations as side factors. Now, the direct impact of geopolitical instability in distant countries on our real estate market is thus quite a bit muted. There are still indirect effects of the distance conflict that might trickle down into Singapore's economy and real estate market eventually. However, the most salient of these indirect effects will be increasing commodity prices and disruptions to the global supply chain. Commodity prices tend to increase during significant scale conflicts as portfolio managers shift into more defensive positions. Now, in the recent Ukrainian conflict, we have seen the price of crude oil shoot up more than 30% from $93 USD to $122 USD per barrel. Now, the price of oil increasing signals more than just the increasing car petrol prices and our utility bills. A prolonged energy crisis could result in higher prices across the board in cost-push inflation. Now, in the context of Singapore real estate market, material and transport costs would rise and could potentially translate to higher construction costs of new projects as well. Now, eventually, what does this mean? End consumers would be the ones footing the bill. Now, due to inflationary effect, property prices would increase, barring any direct involvement in the conflict. Thus, geopolitical instability also causes disruptions to supply chain on a regional and global scale. Global transportation industry would suffer from no-fly zones to the rerouting of supply route. Delay should be expected and perhaps rising prices as well in that segment, although not on the scale of a global pandemic. Overall, the part on Singapore's real estate market that would be impacted the most would be the price and length of future developments, though we would expect this effect to be relatively small. Now, another critical factor resulting from geopolitical instability is the movement of financial capital. Typically, money is moved from offensive to more defensive asset classes like bonds, dividend stocks, and to other institutionally sound countries. Now, Singapore is fortunate in this case because it has a well-developed institution and healthy capital market. Coupled with geopolitical stability, Singapore becomes a potential choice as a haven for fleeing capital from foreign markets. As Singapore is also known for its relatively lower tax rates, fleeing foreign capital might find itself in the commercial sector. Now, this would also apply to the real estate market. The commercial property in Singapore might see a slight uptick from foreign interests due to its safe haven trade. Singapore might also benefit from the movement of financial capital. Now, some closing thoughts. We once again offer our thoughts to the lives lost and their families who dearly misses them. While it is natural to want to find out how we, the Singapore market, are affected by the conflict, we should also appreciate the peace that we enjoy now and not take it for granted. We'll see you soon in the next episode. Take care.